A well-designed GST could boost GDP growth by up to 2%. The first discussion paper on GST in India was issued in 2009. It's 2015 and we have the design for what many experts call a half-baked GST, a dual structure, an additional 1% levy on interstate supply of goods, several exclusions and very little time to the 1st April 2016 deadline. Hello and welcome to the firm. Today we ask if a half-baked GST is worse than no GST at all, and is the April 2016 deadline a dream? On the show today, Senior Advocate Arvind Dattar, tax lawyer V. Lakshmi Kumaran of Lakshmi Kumaran Sridharan, and Indirect Tax expert Rajeev Dimri of BMR. Gentlemen, to all three of you, a warm welcome. Mr. Dattar, you are the angry young man of today's half-hour movie on GST, because in your words, this reform is not a landmark, it's a landmine. So before I get into the specifics of GST design, is it your argument that a half-baked GST is worse than no GST at all?
Absolutely. First of all, I don't think GST is suited for India, for a vast, diverse country like India. And worse than a GST is a half-baked GST, at least in its present form. It's a completely mutilated and mangled form of GST with so many exclusions, so many exceptions and so on, and it's going to be very difficult to work. And as I think the most dangerous part is the constitutional provisions which enable every state to have its own goods and service tax. So now you're going to have one parliamentary tax for interstate GST, and you're going to have as many as 25, 26 different GSTs levied by each state. And I do not know what is the limitation of each state in making its own laws going off on a tangent. So it looks to me very, very frightening indeed.
Mr. Lakshmi Kumaran, you have on this very show not many months ago said that we must begin somewhere, and imperfect GST is at least a beginning. Do you still stand by that?
Of course. What I wanted to say is we never had a perfect taxation system, whether the income tax or customs or excise service tax. We always had some deviations. But I do believe that GST regime will definitely avoid the cascading effect and also will make our export products a little more competitive. So therefore, even if we are going to get a so-called, I would say imperfect GST, we should welcome it. Over a period of 3-4 years' time, all the wrinkles can be ironed out.
Rajeev, would you stand in the corner of Arvind Dattar or in the corner of Mr. Lakshmi Kumaran?
I respect both of them, but on this one, I'll go with Mr. Lakshmi Kumaran. I think the way I see it is April 1, 2016 is the beginning of the process of implementing GST. We don't have to judge it as on that day. So I agree that it is a fragmented system with lots of exclusion. But the way I look at it is that it is a process that we are beginning, and over a period of time, short period of time, we will get many of those exclusions back into GST. But a center-state dual GST will remain, but that is no different from the system that we have. So I do believe that the system that is being proposed, while may not live up to the global standards, but it is a huge improvement from where we are today.
All right, let's dive into the debate then. Mr. Dattar, your first point of contention for why this format of GST must not apply to India at all has to do with a point that you've already raised, which is the highly complex structure of GST, a dual structure that, in your words, could lead to what, 28 different state laws?
Yes. You can have 28 different service tax laws, and there's a GST Council under the Constitution whose powers are only recommendatory. Actually, if you see Article 246A of the Constitution, it says that every state legislature can have a goods and service tax. Now, there is nothing in the Constitution which prohibits or prevents one state from going off on a different tangent from the other. There is nothing in the law which prohibits a state from granting some exemptions here and some exclusions there. The basic architecture of the basic DNA of a good GST is a complete seamless web of taxation. And I personally believe that if GST has to work in India, it has to be a unified GST. We can't have a central law and 20-30 state laws. So the DNA is completely flawed. If I may use a common expression, the basic structure of this GST format is completely flawed. And mind you, Lakshmi Kumaran said 3-4 years. We don't have the luxury of experimentation. You're going to completely change the indirect taxes procedure. And if something is going to go wrong, it's going to be very difficult to correct. So I think it's very, very dangerous in the present format. They could, and unless See, we have got a history of the states not being disciplined, In terms of VAT also, each state has its own rules. What prevents them from having their own service tax registrations, service tax provisions? What about the different VAT provisions? How are you going to manage the interstate movement of goods and so on? What prevents one state from levying one tax, another state from levying another tax? And mind you, 9 years you're not able to come to basic consensus. 9 years have passed since 2006. We still don't have consensus. There's still a lot of reservations. Congress is going to give a dissenting note. And after all this, we are still saying that this architecture is going to work. I'm afraid it is not going to work at all.
Mr. Lakshmi Kumaran, won't the central GST law, we haven't seen any signs of it as yet, but whenever it does appear, won't the central GST law serve as a model for all the states? Or do you expect, as Mr. Dattar says, different states will have different GST laws?
I think this question has been discussed with the empowered committee. The consensus reached is to have more or less a model code will be made. As far as central GST law is concerned, it will be a separate legislation, and a model code will be made, and then the state governments are going to enact the GST laws of those particular states in line with that particular model code. So therefore, there will be lot of harmonization and lot of harmony as far as the laws themselves are concerned. And as far as the India is concerned, because it is a federal structure, both the central and the state have to necessarily collect the taxes for their share, and therefore for a political decision to be taken at this point of time, if they have a dual system like central GST and state GST, which also empowers the state governments also can collect their own taxes, but if the laws are going to be harmonized and unified, then I don't think there is a big issue relating to each state has freedom to levy or legislate their own way. I think that GST Council will do the policing and monitoring, and therefore I believe that the legislations of various states on the GST will be harmonized, excepting some exception being given for a particular state, a particular commodity. They can increase the tax or lower the tax depending on peculiar situations. Otherwise, the movement of the goods and the payment of taxes both by the center and the states will get ultimately harmonized.
Rajeev, hark back to the VAT experiment and tell me whether you expect states to stick to the model code. Do you expect the GST Council to be effective in policing states?
Well, I start from a different position that the structure that we have today is fragmented, is flawed. We have a number of, unique situations in different states. I see that those uniquenesses and those divergences coming down. So if the service tax, excise and VAT is going to collapse into a two-tier structure, I agree that we don't have a history of states being extremely disciplined. So the possibility of certain things happening at a state level cannot be ruled out. But that happens today. Today we have far more fragmentation. We have far too many points of compliance. We have far too many points of, arbitrages that exist. I see, with however shortcomings it has, at least it is a huge improvement over our present system. And I think that's what I guess some of us are looking at, is that is this glass half full or is this glass half empty?
No, I want to add a point here. Please note that the GST Council has only recommendatory powers, and there is nothing in the 122nd Amendment which says what will happen if a state refuses to fall in line. There's nothing the Council can do if a state refuses to fall in line. And what happens is these are the minor variations which completely distort the GST. And as it is, you don't have so many like electricity, petrol, all these are all out of GST. And if some states are going to make further changes, it is going to further distort the system. The
second reason, Mr. Dattar, why your glass may be half empty or all empty is the issue of a mutilated GST. So you make the point that the 1% levy that has been recommended and the parliamentary, the select committee has agreed to that 1% levy, as well as the many exclusions from GST. For instance, petroleum products or alcohol or real estate. Those contribute to a very mangled, mutilated GST structure.
Yes, absolutely. And to add to the problem, suppose some states start granting exemptions to certain products. Now, the moment the final product is exempt, you will not get the input credit. So you're going to have more and more distortions in the system. And what is tragic is one of the major input costs is fuel which is used to generate power, and you're not going to give input credit for the duty paid on fuel. That is so unfortunate. Electricity duties you will not give credit. And I don't understand why you're excluding the entire real estate sector from GST. There is no explanation for that.
Rajeev, you can't argue that you're in favor of the 1% levy, and I doubt that you will argue that you're in favor of all these exclusions. So at least to this point, you need to concede that this will lead to a mangled GST?
Well, let me state my point, and then I'll come to whether I agree or otherwise. There is absolutely no justification for this 1%. I think the whole country is united on that. Whatever may be the compulsions, that's a bad one. In the manner in which it is currently written, it could apply on so many things like stock transfers, etc. I do not know what has been the reported amendment in the Constitutional Amendment Bill as done by the Cabinet, so perhaps it may have partly addressed that. But as it stands today, as it is available in public domain, there is no 1% justification for 1%. So to that extent, I fully agree. On the exclusions part, whether it's real estate, whether it is power sector, whether it is petroleum sector, I think that we need to look at it as a process. So if you're going to judge GST on April 1, 2016, yes, it is going to look something completely mangled and without justifications, without, all these exclusions don't make any sense. And that's, I think, at least in my mind, is the process that we need to walk, that the process of implementation of GST is going to take time, 3, 4, 5 years. The way we look at it today, the petroleum sector is not fully integrated into our existing system because the credits are restricted under excise for number of things. Real estate is not fully integrated into our present system. So some of these, power is not integrated into our present system. So these are not new exclusions. I'm not justifying it. I hope they were already included, but in my mind the assessment, perhaps I'm over optimistic, but my assessment is that from the time it gets implemented in 3-4 years this will come in. So I don't see these things as making the situation worse than what it is. To me, it may be a small step up, but it is a step in the right direction, and the hope is that once they get tested, once they get comfortable with the new system, these things will come in. I mean, we've had the experience of VAT being implemented across states, barring few exceptions. By and large, for 80, 85, 90% of the product, the system has worked. The discipline has been maintained.
Now, Mr. Lakshmi Kumaran, even if that 1% levy, the wording is amended to say that it applies on the interstate supply of goods for a consideration. So stock transfers are excluded. Even then, would you say that the 1% levy truly mutilates this GST structure?
Definitely. On this particular point, whichever tax is being paid at a particular state, if it is not given as a credit at the other end, it is mutilation. And to that extent, I entirely agree with Rajeev. Having said that, I think all the state government and the central government are approaching this particular new levy GST with caution. I think center is worried about the compensation to pay to the states. States are worried about whether they will lose the money or not. I, as a person, I feel that there will be revenue buoyancy, that the fears of both the center and the states are unfounded. But they will realize it as they move on. So therefore, as a political decision, if they want to do it in the beginning of 1%, I am not voting for it. I am in fact against it, as Rajeev has said. But if that is going to give comfort to the state to at least start the mechanism, I think we should give them the freedom for 1 or 2 years. They will learn that this particular thing actually is not going to give dividends, and therefore they will ultimately, in fact, there is a promise already that it will be phased out. So therefore, that is about 1%. And with regard to the other aspect, with regard to the exclusions, as Rajeev has said, as of now, petroleum products and alcohol are in any case out of SENVAT as also VAT. Because about 40 to 45% of the revenue of the state and the center comes from these particular sectors. And therefore, we have been living with this particular problem for quite some time. And if we learn from experience and the revenue buoyancy takes place after 4 or 5 years, I think these particular items will also get integrated in a phased manner. That's the hope. And as I said, if last 30 years we've been living without this credit on the petroleum products and the alcohol, we can live for another 3-4 years. But at least let the remaining commodities get harmonized, and let us start at this particular phase.
Mr. Lakshmi Kumar, I just want to add one more point. It seems that the centre has decided to compensate the state for 5 years. If that is the case, and if the centre is going to compensate the state for 5 years, not may but shall, even if the wording doesn't change in the constitutional amendment bill, then should that 1% levy still survive?
Oh, I mean, your question to me, answer is this. 1% should go, but then the centre will now say that, look, the entire burden of compensating the states are with me now. If the 1% thing will ultimately, to some extent, will offset this particular burden on me, and therefore centre will also be smiling behind, saying that the 1% levy, though asked for by the state governments, will ultimately help the centre to not to offset that particular loss to that extent.
Okay. Mr. Dattar, are you convinced by what Mr. Lakshmi Kumar and Rajeev have to say about this?
Well, fortunately on this point, all three of us agree that it is an unfortunate step, and I'm not very sanguine that it is going to be phased out. I know the 1990 Gulf surcharge continued for more than 25 years long after the Gulf War was over, so I'm not very sure this 1% is going to be phased out. I won't be surprised if 1% becomes 2% at a later point of time. 1% should not have been there at all. And I basically don't buy the argument that today we are living without the excise duty on what you call on power, or excise duty on diesel not being given for SENVAT credit. That's the present system. If you're going to a GST, if you're going to a seamless GST, then you should not allow these matters to go out. If you really want to help industry, if you want GDP to grow, then you should have the courage and the, if I may say so, the broad-mindedness to include everything into one, and then only the GST will work.
Your final point when it comes to design flaws, Mr. Dattar, has to do with the revenue neutral rate and, you know, the expectation that it could be very high, given that, if I remember correctly, the Empowered Committee of State Finance Ministers had suggested 26.7%, even though the 13th Finance Commission has suggested a rate as low as 12%.
Yes. Well, 26.7% will be a guaranteed disaster of gigantic proportions. Now, I'll tell you one thing. As far as this RNR, the revenue neutral rate, is concerned, if it is a rate which applies from business to business, say, for example, a tire manufacturer pays 20% duty and the tires are sold to an automobile manufacturer, there is no problem because the automobile company will take the credit of 20% duty. For him, it's revenue neutral. But when you're going to levy 26.5% on electrical goods or electronic goods sold in showrooms, or you're going to levy 26.5% on soaps and shampoos and so on being sold at supermarkets, you can be rest assured that overnight more than 70% of all retail transactions will be in cash. People will simply not be willing to pay 26% duty, and believe me, it will double the black market income. That's the biggest danger, I think. 26.5% or even 18% is going to lead to a huge black market economy, at least as far as the retail outlets are concerned.
But Mr. Dattar, the government seems to suggest that it will keep the revenue neutral rate below 20%. Yes. Is that acceptable to you?
No, I think anything more than 12% will be dangerous. I also want to mention that if we really want to implement GST, I think we should really implement it in stages, apply it for 2-3 sectors first, see how it works at 26% or 18%, and then go on to the other products. An all-India rollout at one time will be disastrous.
Okay. Rajeev, I can't believe that you would argue, because I'm sure your clients are also fairly suspect of any rate that is above 20%. If it is below 20%, let's say 15 to 20%, is that an acceptable rate? Is 12% the only possible rate that GST will work at? Do you suspect that if it's anything higher than 12 or 13 or 14%, that the evasion problem will in fact increase, as Mr. Dattar has indicated?
Well, we all would wish it to be as low as possible, and 12 sounds, very nice number. But if I look at that today, most manufactured products with excise duty at 12% and VAT anywhere between 12 to 14% do have a burden of tax, and we're talking about that combined tax being rolled into a GST rate effectively of a certain percent. I just can't believe that it 12 would be good enough. Even service tax, which is a pure tax, is today at 14. So mentally, in my mind, I'm certainly acceptable to a rate which is lower than 20. Generally around the world, if one were to take a rough and ready average around the world, it is 19%. And therefore, can we imagine India to be in one step becoming one of the lowest tax countries in the world? I would love to see that day, but should I hope for it? Maybe not. So 12 to me sounds extremely low. But I certainly think that anything higher than 20, there'll be a risk of backlash from the taxpaying public, and that has all bad consequences.
So what do you think, Mr. Lakshmi Kumaran, is the ideal GST rate? Would it be around 20? The rate at which GST will work?
Anything more than 20 is going to be disaster. Anything less than 20 is workable.
I have one more question, sir, with regards to the rate. Would you argue that the rate ought to be included in the constitutional amendment bill?
I think Constitution is basically guiding the powers to the states and the center to legislate. To have rigidity in the Constitution, this is a particular rate there, is not acceptable, because if anything has to be changed, you have to go for a constitutional amendment bill, especially involving the center and the state, again two-third majority here and also two-third majority in other states, etc. That will call for a lot more complications.
You raise an important point, whether there should be a cap in the Constitution or not. I think there's a mechanism through Article 252 where we must have a national cap, because what's going to happen is you may have a 16% rate or a 17% rate, but in the constitutional architecture as it is now, nothing prevents one state from levying an additional GST or a GST surcharge, or like we have additional VAT, additional tax and so on. So that also could distort the system. So there must be a cap of how much tax can be levied in any form. And secondly, I still feel anything more than 14-15% will be very, very dangerous. It will lead to a lot of evasion at the retail sector. I'm not so worried about the manufacturing position and the organized industry. I'm only worried about the sales at the retail level. The other thing which we have not discussed is, who are the people governed by GST? Are you going to keep the exemption limit at 10 lakhs? Are you going to keep it at 50 lakhs? We don't know. That's another major problem.
And that is an equally important point as all the design flaws, because Rajeev, not only do we have no sign of the GST laws, we have no draft law out there to even think about or ponder over. The administration revamp that is required for something like GST is humongous. We know that only now the bids are going out for an IT network for GST. The implementation challenges are humongous. Are we at all going to be ready on April 1st, 2016? Even if one were to accept the design flaws, do you think that there is enough time to actually meet that deadline?
I think that's the most challenging part. I mean, of course, we have this political process that is currently underway, but let's assume that we are past that process, and that's when the rest of the executive comes in. I think to meet the April 1 deadline, there has to be huge amount of work that has to be done by the government and by the industry. A super fast effort will have to be put in to make sure that we have an effective implementation of GST from the government and for the companies.
How nervous are your corporate clients, Mr. Lakshmi Kumaran? Would you suggest that the deadline be pushed? Is it feasible to have GST implementation in the middle of a financial year, or must it be pushed to the next financial year? What do you make of the fact that the process in itself seems fairly compromised and tight right now?
My conversation with my clients indicate that April 16 is really a dream. It is going to be a tremendous task for them. In fact, if they have to amend and modify the ERP system, that itself is going to be a problem. And if they do, and then there are some bugs, and then the legislation is not properly taken care of, then it can lead to faulty returns and faulty payment, which can result in penalties and prosecutions. So they are very worried about that. But at the same time, they don't want this to be postponed to April 17. Probably many of them will be happy if it is done by sometime in October 1916, by which time, 2016, by which time I think some clarity will come, and then they will be having some accelerated process of correcting the ERP system, etc. And also give some time for the government to have their IT backbone properly.
But is it feasible to introduce GST in the middle of a financial year?
Why not? There's no problem at all.
Okay.
There is no there is no problem at all.
Okay, so I have one final question and only about a minute left on the show, so I'll ask you for quick responses. The promise of GST is an up to 2% boost to GDP growth. Will this GST design give us that kind of GDP growth boost, Rajeev Dimri?
I think yes, but let's not assume it to be within the first 6 months of the GST introduction. It is going to take 2-3 years, but yes, I do believe it will streamline a lot of things and bring parallel trade into the mainstream. So yes, I do believe so.
Mr. Lakshmi Kumaran, will this GST design give us that 2% promised boost to GDP?
I entirely agree with Rajeev. I think within about 2-3 years' time, we can see the results.
Mr. Datta, the last word on this debate goes to you. Are you still the angry young man of GST?
Well, I've really never understood how do you get this figure of 2% GST. I mean, on what basis are you saying that GST will grow, I mean, the GDP will grow by 2%?
Up to 2%.
I've not heard of any tax
The estimates are 0.3 to 1.9 or something like that. Up to 2%. A big GDP boost, let's put it that way.
No. I think the effect on the GDP will be negative if it goes in this mutilated, mangled form. Like Victor Hugo said, you can't stop a good idea whose time has come. The GST is a bad idea whose time should never come for India. That's my view.
All right. On that note, gentlemen, I'm going to leave it there. Thank you to all three of you for joining us on this episode of The Firm. And thanks very much for watching. We'll be back next week.